At its 53rd meeting in New Delhi, the GST Council made several pivotal decisions aimed at enhancing tax administration and simplifying compliance. Finance Minister Nirmala Sitharaman announced the implementation of nationwide biometric authentication to curb fake invoicing, leveraging Aadhaar-based verification. Additionally, the Council proposed retrospective amendments to input tax credit timeliness under the CGST Act from July 2017, extending the time limit for claiming credits for invoices filed up to November 30, 2021. This move is intended to streamline and clarify the ITC claiming process retrospectively. Now, the question stands: how far is this aimed at? In today's video, we will examine the public finance concept, which is aligned to the scenario for today's discussion. Later, we'll also discuss a question based on amendment. So, hi everybody. The Council recommended uniform GST rates for specific items like milk cans and cartoon boxes, aiming to harmonize tax structures and reduce complexities for businesses. In a bid to benefit common citizens, the Council also decided on tax exemption for various services provided by the Indian Railways, including platform tickets, retiring rooms, waiting rooms, clockroom facilities, and battery-operated car services. These decisions reflect efforts to bolster the GST compliance, simplify tax procedures, and support the public services. Now, this above scenario is related to some financial concept, but which one? The answer is optimal taxation. Optimal taxation theory has been developed and refined by several economists over time. One of the pioneering figures in the field of optimal taxation is James Mirrlees, a Nobel laureate economist. In 1971, James published a groundbreaking paper titled An Exploration in the Theory of Optimum Income Taxation, which laid out the foundational principles and frameworks for understanding how taxes should be structured to achieve economic efficiency and fairness. In the context of the GST Council's decision to retrospectively amend input tax credit timeliness, we can apply this theory as follows. Number 1 is minimizing distortions. The retrospective amendment aims to clarify and extend the time limit for businesses to claim the input tax credit under the CGST Act. This action reduces uncertainty and potential economic distortion that could arise if businesses were unsure about their eligibility for the ITC within a specific period. By providing clarity and extending the timeline, the amendment reduced the risk of businesses making suboptimal economic decisions due to tax uncertainty. Number 2 is revenue goals. From a revenue perspective, the amendment supports the GST system's goal of ensuring that businesses can claim legitimate ITC appropriately. This contributes to stable revenue collection by preventing inadvertent losses of revenue due to administrative uncertainties in the law. Thus, optimal taxation theory supports such amendments to maintain revenue advocacy without imposing undue compliance burdens on taxpayers. And number 3 is fairness and compliance. Optimal taxation theory also emphasizes fairness in tax administration. By retrospectively extending the ITC claiming period, the GST Council ensures fairness by treating similarly situated taxpayers consistently. This approach aligns with the principles of equity and procedural fairness in the tax policy, which are crucial for fostering taxpayer compliance and confidence in the tax system. Ahead, a question based on amendments would be: why was there a need for retrospective amendments to the input tax credit timeliness under the CGST Act from July 2017? And how will the retrospective extension of the ITC claiming period impact the businesses and tax compliance? Now here's a practical explanation of this with examples. Under the reasons for retrospective amendments, number 1 is clarity and certainty for businesses. Initially, there was a confusion among businesses regarding the timeliness for claiming the input tax credit under GST. This uncertainty led to varied interpretations and compliance issues. For example, a manufacturing company had accumulated the input tax credit for purchases made in the financial year 2017-18 but was unsure about whether it could claim these credits after a certain deadline. The extension reassures such businesses that they can still claim ITC for eligible invoices from that period, reducing their financial uncertainty. Number 2 is reducing compliance burden. Many businesses struggle to meet the earlier deadlines for claiming the ITC due to operational challenges, technological glitches, or delays in receiving invoice. This acknowledges these practical difficulties and aims to elevate the compliance burden on businesses. For example, a small-scale retailer faced delays in receiving invoice from a supplier during the initial implementation phase of GST. As a result, they missed the original deadline to claim the ITC for certain quarters. The retrospective extension now allows them to claim those credits, helping them to maintain the cash flow and financial stability. Ahead, under impact on businesses and tax compliance, number 1 is financial relief and cash flows management. The retrospective extension provides financial relief to businesses by allowing them to claim the ITC for past periods. This improves their cash flow management, especially for businesses with large amount of unclaimed credit. For example, a logistic company had accumulated substantial ITC for transportation services purchased to 2018 and 19. The retrospective extension enables them to claim these credits now also, boosting their cash reserves and potentially reducing the borrowing cost. And number 2 is improved compliance and reduced litigation. By clarifying and extending the ITC claiming period retrospectively, the amendments reduce the likelihood of disputes and litigation between businesses and tax authorities over eligibility and timeliness. For example, a software development firm faced a tax audit that questioned their ITC claims for software license purchased in 2017-18. The retrospective amendments now allows them to substantiate their claims under the revised timeline, minimizing the risk of penalties or prolonged audits. Hope you liked the video. Let's unlock together your full potential and achieve remarkable success in the world of business. If you're new to the channel, do like, share and subscribe for more such content related to business and finance. Till then, goodbye everyone.